And we are live.
Totally.
Yo, I just noticed something.
What?
We both planned this all black thing.
We did not plan it.
Okay. Well, just
The reason why I wore this because I'm cold.
you
Normally,
know,
you know.
it is getting a little chilly, I must say. It is getting a little chilly here in the Pacific Northwest, just a little bit, just a splash. Hello everyone. How are you on this wonderful Thursday? Um Definitely turning off the
All right, just turn
notifications
mine
over
off.
here.
I just turned mine off.
Okay.
But like how it never, when you go on your device on YouTube, it's like super loud.
Yes.
So I have to put in one of these and then share.
Anyways, Jolyn, what's been going on with you today? Tell the world like what's been going on in Jolyn world.
Well, we've been filming like crazy.
I know.
I had to, I had my massage today, this Thursday.
Okay.
So that was nice. I'm super relaxed, hella chill. But yeah, I'm really excited about how the shows are coming, how the episodes are coming along. Really, you know, deep,
Okay. All right. All right. Well,
Yeah. What about you?
congratulations. Huh?
Thank you. So what about you?
You know, I am in like a little bit of research mode as of lately. I've been looking at a lot of data before the election. And so I've just been literally like soaking up data like a sponge and preparing myself to make some moves and possibly hopefully I don't break any hearts today or anything like that, but
Not the heartbreak kid. What? I think you might hurt some feelings.
Well, that's not the intention. So, all right, let's get into it. What's good, everybody? I'm Mark Monroe, and I am accompanied by the wonderful
Jolyn GC and the place to be.
And this is Hot Take Thursday. We've gone through a lot this week, but we always want to start off by saying that subscribe button down below. You can.
It's right there. It's like
just literally like I think it's right over here. It's over here. And also that like button. I mean, we would totally appreciate it, right, Jolyn?
Yeah, I would.
And the bell. Just if you're, you want to be a part of the squad, that'd be gracious. But hey, if not, if you want to be one of those individuals that says, you know what, hey, you got to earn my like. Well, you're in luck. We're here to do that. So today, we got a lot on our plate. So we definitely want to get into it. Thank you for anybody that's dropping capital into the super chats because it definitely goes towards a worthy cause. We don't collect any of it. It actually allows us to put it into each and every single one of you in the community and, keep this movement going. So for anybody that doesn't know, we're now in season 2. Now, let me just do a quick little breakdown of what season 2 means for those in whom which that are kind of like, well, you guys that just got started. So season 1 is still going. Season 1 is not over. Season 1 is still going, but we're introducing more things and staggering them into it, kind of like the rolling fours, but we're bringing a new season into the mix. And then when we get to the 4th season, most likely, season 1 officially comes to its end. See what we did there? Just like rolling fours. So, I mean, the cool thing about it is that, a lot of the great episodes in which that we've done in the past, there's more that's coming from those initial episodes, but we're going to introduce some more people and content creators that are going to come on this channel. Some of which that you may know, some of whom which that you may not know. You never know.
Stay tuned.
But I mean, stay tuned and, we're excited. So if you're dropping capital in the super chat, thank you for, literally signing up to literally put that towards nonprofit organizations that graciously need it. All right. So I just clearly said a lot and I'm going to quickly pass it on over to Jolyn so that way she can talk a little bit of some of the housekeeping here in the Come Up series, AKA what's going on in this market today?
Yo, what is going on in this market today?
Hey.
This
Prime
is
Day.
What was that?
Prime Day.
I thought we were done with Prime Day.
Apparently the market didn't agree.
All right. So I don't know about y'all, but I was supporting some other businesses as well, Black-owned businesses during this week. So, okay, so we have the Dow coming in at negative 19.80 points, and then S&P 500 was negative 5.33 points, and the NASDAQ was negative 54.86 points. So as you can see, NASDAQ was down the heaviest, which will be reflected in sector performance. So for our top sectors, as far as performance goes, energy, financials, and then real estate. And then for our bottom feeders, we have technology, communication services, and health. Now, for our pick performance. For our pick performance, we have... Shut up. Okay, for our pick performance, we have Best Buy coming in with a 52-week high. Twilio, Square, IMJ, Hero, and my stock crush, Tesla. Now, this pick performance looked very different about, I don't know how many hours ago. It looked very different. But, you know, as the title suggests, it's time to change the game up. And this is what we were talking about earlier, how some people might be in their feelings. It's okay. It is okay. It's going to be all right.
We going to be all right.
Yeah, but some things got the boot off the list.
Yes, they did.
So do you want to tell them who got the boot off, or do you want to announce the new ones?
We could definitely announce who got kicked off the island.
All right.
I think that would be a great place to start.
All right, let's start there. So get ready. We kicked off.
Oh no.
We're having too much fun. Okay. RTH, you gotta go. IGV, deuces. XLC, you've been off my list. Okay. ARC-F, bye-bye. FDN, it's been real. And I'll just say one, I saved this one for last. XLY. XLY is not getting the boot though. XLY essentially has moved on, ascended, transformed, has arisen, has arrived to the same status as XLK. So you know that XLK is not on the list because XLK goes without saying.
Yep. But in XLY's defense, I think that the reason why the XLY is the parent, just like XLK. Mm-hmm. XLY is like when your child comes and asks you for something, and then essentially you say, go ask your mom. And your mom being XLK.
Interesting. Well, you heard it here. Either way, XLY is not on the list. So for those of you that have been, you know, passing this list off as yours, you know who you are. You may be watching this, you may not be. But we just switched it up on you, so
wait, so let's just do a quick recap because I think some folks that are in the chat, they're like, wait, what? So to do a quick recap, IGV is gone. FDN is peace out. XLY has not gotten the boot, but it has ascended. And XLC gone. And I think we cut some ARCs, didn't we?
ARC-F.
So we cut ARC-F and ARC-Q.
Oh, I forgot about ARC-Q.
They are gone. Now, it doesn't mean that they're not good. I mean, you know, some of these things in our list are dope, but, you know, think about it like a gardener. You know, sometimes you're gonna have to trim certain parts of the tree or the branch in order for it to continuously grow. And so
yeah, you got to cut it. So it's cut.
yes, it
I
is
feel lighter, you know. I feel
Huh?
like I feel lighter now, you know. I have a little pep in my step, you know. I'm feeling good.
I mean, you know, hold that happy thought, because there may be something that may be dropping, you know, possibly later on today, so, or later on in the show. So you never know. All right. So what's the first thing that we've got on our agenda for today?
All right. So as you know, we hold on, let me scroll over to another screen. You know, I have multiple screens here.
I know, right?
Multiple screens.
Like,
there's a lot going on. Okay. All right. So we, you know, asked the cousins some questions about the news. So we'll definitely get to that.
okay.
And then also, Mark, I remember there was something that we were talking about. Oh, we were talking about the economy. We were talking about GDP. And I think that'd be good to go over that, especially in light of what is going on in our country right now with US, China, you know, some type of tensions or whatever, and then also the election, and you know, so some of the questions that the cousins had kind of tie into what we're going to be sharing anyway today. So I figure we get into what we're going to share, and then whatever questions were answered, then we'll get into that.
That's fair. So for anybody that knows me, I don't really like to talk about politics. I mean, I just don't. I mean, everybody's opinion is their opinion. I like to talk about the data. And so where I can look at the data is taking a deep dive into places like, for example, the economy. And some of the things that we look at when we look at what makes a strong economy, we look at what is called GDP. So just for the record, GDP, gross domestic product. And so how I look at GDP is pretty much based upon three factors. And this is every country, they have GDP. So again, GDP stands for gross domestic product. I mean, we're getting a little bit of an economics lesson tonight. So, I mean, if you know the economics, and you kind of like have an understanding of what the battlefield looks like. So when you think about GDP, you think about what was produced, what was brought in, and what went out. So when we say produce, what was manufactured. When we think about what was brought in, we thought about what is imported. And then when we think about what went out, what was exported. So you probably see these numbers take place on a monthly basis, and it kind of gives you somewhat of an idea and how different countries fare against each other. And so I guess, you know, since we're in 2020, let's look at the impacts of what COVID-19 has had on the US economy. Let's start there, shall we? I mean, then we'll get to or should we go to, or which one should we start with? Should we start at states, or should we start at just the general economy?
Let's start economy and then drill it down.
Sweet. All right. So with that being said, let's start here at America's economy, the impact of COVID-19. So when we think about it, like, here's the real GDP change from previous quarter over quarter. So we literally look at it over a quarterly basis.
Can you make it bigger?
Of course I can. Come now.
Pip pip.
You like what I did there? How's that?
Yes.
All right. So in the second quarter of 2020, the U.S. recorded its deepest economic drop of output for a record. So when you look at it, we went negative almost 2%, and then we're actually down almost 10%. And this was back in Q2 for this year. So what are some of the factors to that? And this is where it comes into play when we look at factors. Look at consumer spending. When we look at it in the trillions, consumer spending was ridiculously well, it was good. I mean, but it was still high. But consumer spending was on the up and up, and high means a good thing. Essentially, that from January 2019 all the way to the end, we had high consumer spending. Then all of a sudden, COVID-19 hit, and that changed everything. Consumer spending stopped. Of course, as you can kind of get an understanding that a lot of stores were shut down. A lot of them didn't even have significant e-commerce strategies. So it pretty much left a lot of companies out there in cold. Service businesses, like for example, theaters and whatnot, close. When we look at travel, done. That's your consumer spending. And when consumer spending went down, notice also that, say, for example, the national debt went higher. So from January, we were already at almost $22 trillion in national debt. But when you put it into perspective, look at how high we've skyrocketed since January of this year. And a vast portion of that is thanks to stimulus packages and, you know, providing help in unemployment, extra money in unemployment. So that all contributes to national debt. And then on top of that, like loans in which that we got to pay and stuff like that. So it all goes into play. Now, notice at the same time that national debt went high, and as, say, for example, consumer spending dropped, U.S. money supply in trillions went higher. So we started printing more money. And thus, I mean, hence the reason why, for example, quantitative easing, the Fed giving the market steroids, buying up a lot of corporate debt from a lot of corporations that were struggling, including travel companies, trying to keep them pretty much afloat as much as they could. But yeah, we'll see. So then we come down to consumer sentiment. And so consumer sentiment was also at high levels, which says that, you know, hey, we're feeling good as consumers. I mean, this is consumer spending. So when consumers feel good, then they spend. When they don't feel good, then what do? They stop spending. And so thus we saw significant drops in consumer sentiment. So then we look at the Fed's balance sheet. So now we're talking about this in trillions. If you notice, the Fed's balance sheet stayed pretty much practically low. If anything, it started removing stuff off of its balance sheet from January 2019 to like really mid to late 2019. And then all of a sudden we started making some of those creep ups, especially this actually took place. This started actually before COVID-19. So remember, if you journey back with me during the time that we were beefing with China and this trade war, and everybody was looking at the Fed to be like, hey, save us. You know, this whole little ramp up here that we see. Yeah, that was the Fed ultimately adding more to its balance sheet to help the United States prop itself up, especially in terms of what we were doing in US-China trade as it pertains to quote unquote trade deficit. And then here we are in 2020 where we just significantly skyrocketed. Just imagine this. This is all the debt, the corporate bonds and everything else, even mortgage bonds that essentially that the Fed started picking up. And as it started printing off more money and adding more to the money supply, when you start having more money supply being added or created, then ultimately what you're doing is you're diluting. And with the dilution of money, then obviously the value of the dollar starts to drop. And that's exactly what we started to see. So typically we tread the line of about, I'd say about 96, 97, and we're below 95 now. So then when we look at fiscal expenditures, these are all expenses, right? Well, if you notice from January 2019, we had this like squiggly line where it was essentially every single time when the Fed was there to literally help the market tag along, especially during the US and China trade for phase one deal, that was the Fed. And the Fed has ultimately become very, very political. It's been very active politically, not in the sense of voicing their opinions of politics, but more so in the sense of moving based upon politics. Where in reality, the Fed is actually supposed to be independent of all political or governmental organizations. It's supposed to run separately from all of those. Unfortunately, it has not. Now, ultimately, We already had this going on with US and China trade, which if you notice during that time, you saw quite a few industries taking significant hits. Now, some folks will be able to tell you that, hey, we had some industries also doing better, which is true. But for the most part, I mean, here's some homework. Go look at what happened to the agricultural sector. All right, so then we move on to inflation rate by percent. So essentially where you want to be is you want to be anywhere between 1.5 to about 2.5%. This, when your inflation is high, it's really a sign that essentially that the economy is doing well. And at the same time that they've raised their inflation, that's at the same time they're able to start removing things off of their balance sheet. But unfortunately, we're not there. And as you can see, it's completely a direct mirror of each other, where as the balance sheet increased, inflation essentially dropped. And then let's look at the loans to the private sector. So, and this is again in trillions. Here we are, just steady line. And then all of a sudden, boom. Now we're coming down a little bit, but here's the worry though. Coronavirus is going into its second wave. And you're already starting to see countries starting to shut it down and go in lockdown again. Well, what's going to happen with the United States? Will the United States be exempt from all of this? Or will the United States also partake in, some of this data? And if that's the case, you could possibly be seeing more loans coming out to more private sectors to help save and prop them up during these tough times in the economy. But we're not done. We are not done, because I got one last image for everyone, which kind of like puts it into everything. It kind of crystallizes it for everyone. Here's America's economic drop, so that way you could see exactly how it played out. So, of course, given that there was a lot of uncertainty, total GDP annualized contracted by over $2 trillion in Q2. So think about it. We were in Q1 of 2020, so in January, our GDP was at 21.6 trillion. By Q2, we were down 19.5 trillion. All right, so how does that work? Well, here's where it gets a little bit more grim for everyone. I'm gonna let this sit here for a second, so that way you can kind of like get an idea of what your state looks like. Now, a lot of you guys are asking Mark, like, okay, well, how does this go into consideration when we're looking at the stock market? Well, just put it to you like this. If you have GDP that's slowing down, and remember what we said about GDP. GDP is what is produced or what is manufactured, what is imported, and what is exported. You take those three together, and then that's how you're able to calculate GDP, aka gross domestic product. So when we look at it, we see states essentially decimated. Look at Nevada, 42.2. Look at Hawaii, 42.2. Tennessee, 40%. New York, 36%. Florida, 30%. Texas, 29%. Where we live, 25.5. California, 31. And, the numbers is pretty much on an average of about, I would like to say 30, about 30%. So now many of you guys are asking, like, Mark, how is this all calculated? Well, I'm glad you asked. Here is the hardest hit industry. Here's a diagram of the hardest hit industries when we look at it by state. So when we talk about Hawaii, right? Hawaii had an over 18.5% drop because tourism was completely halted. When we look at the differences in areas, accommodative and food services, look at all the states in which that they accommodate. And it pretty much lets you know, like, this is pretty much what they do. And when you think about tourism is a huge factor when it comes to states in receiving income and revenue. When you take away tourism, when you take away their ability to be able to produce, when you take away their ability to be able to export, now we've got problems. And then you see certain things like healthcare, right? Look at what happened in the healthcare for a lot of these areas. A lot of these areas have been decimated. I mean, when we look at Delaware showed significant significant gains in finance, but overall GDP was pulled down by losses in health and social assistance and accommodation and food services industries. The US overall is at a 4.38% change from Q1 to Q2 of 2020. That's huge. So when we say that, like when a lot of you are saying, I guess I should do this as I'm not trying to make this like, I'm not trying to spook anybody. Of course, I'm trying to get like, just tell everybody the truth. Because of course, we want you to know the truth. Mm-hmm. And when you have the truth, it's a totally different one. It's a totally different ball game. So I'm going to pull it up. So many of you just saw the US economy. Well, let's see here. Let's see if I can pull it up for everybody. Let's pull up the Dow Jones Industrial Average. I think that can give everybody kind of like a major kind of like wake-up call. Does this show signs that the economy is doing well? And that's why when we look at the economics tells us a totally different story. It's a completely different story. We saw the market recover, and that was based upon a lot of speculation. That was based upon a lot of folks jumping in because they wanted to be traders. You saw a lot of folks looking for sources of revenue or income, and where not to look other than the publicly traded markets. I mean, for example, the reason why I'm bringing this up to everybody is not to spook you or anything else like that, but it's just to show you the stark contrast difference between the United States economy versus the companies that are listed in pretty much the publicly traded market. And many of these are these companies are based out of the United States. Now, of course, you have companies that have done ridiculously well, and that will continuously do well, and they've been very well positioned. Some of these companies, some of these sectors were not even prepared because they were already struggling long before COVID happened, and then it just completely decimated them. That's a very fair argument. But when we look at it in perspective, though, when you hear people talking on TV and tooting about the stock market and how well it is, you got to put it into perspective and say, okay, hey, the stock market does not reflect what the economy really is. And that's that.
So, sorry. Well, one thing, yeah, I'm fine. Again, it's good to, to see it. When you do look at it though, especially visually, it could seem like, dang, we have a ways to go. But I also like to think about the fact that there were people that made money during this time, and not just, the Jeff Bezos of the world, but I mean, some of you who are watching also made money during this time.
Oh yeah. $5.7 trillion in wealth transfer. For anybody out there, let me ask you this. If your portfolio is up anywhere from, let's say, 5% all the way up to, let's say, 400% return for the year, go ahead and just hit yes.
Let me hit yes.
Just go ahead and type yes in the chat.
Yes.
And the reason why we're asking you is because of the fact that if you've taken place in the market, then you've taken part of that wealth transfer of that $5.7 trillion.
Which is awesome. So I want to get to some of the questions that some of the cousins had. Let me
Let's
just
do it.
multiple screens here, people. Let me just, pull this up. One time I'll be like, okay. Here we go. All right, so let's see. All right, here goes one. I'm not gonna say your name because some names are just, there's a lot of letters, so I'm not gonna say it. But a cousin, a beloved cousin, asked about Disney's transitioning to a streaming focus, and when do we factor that into the company evaluation?
Say that one more time.
Disney transitioning to a streaming focus, and when do we factor that into the company evaluation?
Now, if you journey back to like a little bit in time, if we journey in our crystal ball here and say, okay, hey, let's go back a few episodes. Like, let's just roll the clock back.
It's there.
Can I not say that the road to the Oscars moving forward runs through streaming companies?
Yeah, you said Netflix.
I did. So when we look at Disney, the problem is Disney still got a lot of things that are on its sheet. Like, for example, its theme parks,
Struggle Bus,
ESPN, it's commercial studios, and it's Hollywood studios. You have to ask yourself, and this is where it comes into consideration, and for those in whom which that represent Wall Street, they will start asking those questions as well. Does the streaming fit for what the essential revenue that makes up Disney? Will it be able to suffice for everything? I mean, Disney parks brought in a lot of money.
Yeah.
Those parks seem a little empty.
And if we have another, I don't know if we're gonna, well, I guess it really does depend low key who's in office, but another shutdown would just decimate Disney parks.
They're already decimated.
I mean, but it would just be, they would just have all this real estate, and what do you do with that? But you know how the movie theaters are closed and everything? I saw something about how I don't know if it was AMC or Regal, I don't remember which one, but AMC. Was it
possibly going bankrupt?
Oh no, I wasn't gonna say that. They were I want to say it was Regal. I'm not sure, but talking about, doing like private rentals.
Yep. Do you really think do you really think though that that's actually going to
No, I appreciate the creativity though. I appreciate the creativity and thought about that. It's not going to, $99 versus a ticket is like $20, $30. I don't even know how much a ticket is anymore.
Well, here's the funny thing. They've done private showings all the time. Like, we act like this is something new. The only thing is that they're just raising the price for a little bit of inflationary purposes. So that way, essentially, they can make up for some potential lost revenue and build in like a small portion of profit. That's it. A lot of these companies really significantly are just struggling. They just say, hey, we need to survive.
Yeah.
We just got to survive 2020. Like, they're fighting to thrive. Like, I wouldn't be surprised. And there was a little memo that leaked from the Republican Party. I don't know if anybody else saw that, where they were saying that even if Donald Trump loses, then essentially that they would pretty much make sure that they're still within Senate to literally make sure that they pretty much slow down the Biden presidency to, not get the stimulus passed.
Yeah, that's corny, but we don't have to talk about politics.
We don't. See, hence the reason why you see how uncomfortable I am just in talking about that.
Yeah, you look like you were kind of, twitching in your seat a little bit.
Clearly. Yeah, I totally belong on CNN.
Okay, another popular item was a Fastly's sell-off. And their loss, what was it, 0.25%? Or not 1%, but 1/4 of their
I was like, they fell 23%.
Yeah, almost 1/4.
A lot of folks have been asking me about Fastly.
Mm-hmm.
And what are you going to do when your biggest moneymaker is essentially struggling because they're dealing with a bunch of BS that's coming via politics and everything else? Of course, they always say it rolls downhill. So if it's hitting that company, and just, we're not going to get caught up in ceremonies here. TikTok is Fastly's it's their number one customer.
Yeah.
So you take away TikTok's revenue, that takes a huge chunk out of Fastly. Now, will the stock survive, or will it essentially recover? Yes, over time, but it's not until we actually know what the actual damage is for TikTok. When we can finally know what the damage is for TikTok, then essentially we can actually say, okay, hey, maybe we need to give this stock another look, or Fastly another look. But until then, I mean, the question is this more pain ahead, or are they setting this? Because mind you, they didn't even report earnings yet. They made this report prior to earnings. So it's kind of like the same thing when companies did during COVID-19 earlier in the year, where I think the first domino to fall was Apple, where they literally just came out and said, we're not going to give any revenue guide. We're not going to give any, guidance because we don't know. And on top of that, we're expecting, essentially that our revenue is not going to be where it's supposed to be thanks to COVID-19. So I wouldn't be surprised if you don't see other companies that possibly could partake in that before earnings come in to kind of like soften the blow.
Now, would you say Fastly is experiencing the category of damaged stock or damaged company?
I think it's too soon to call, but I think that ultimately what we're definitely realizing is that I think that that's a sign that your company was overvalued because of the fact that it was predicated on one customer. And so when that one customer ultimately struggles, it really makes us wonder, how strong is Fastly? And that could be said for many other companies that have also recently gone IPO. Like, one of the things that I think I also say, if we roll back the clock a little bit, where if we go for TiVo or anybody else, go check the tape. But I think I said, be careful of Russell 1000 companies, your smaller cap companies, because they've had ridiculous run-ups. And yet at the same token, the data doesn't fully validate, that they belong there. Like, your Overstocks and your Wayfarers, how are they up, significant percentages for this year? Just doesn't make any sense.
I mean, overall, what's interesting about the small caps is overall they are outperforming, like the Dow and everything. But yeah, I agree with you on being careful.
The market is a lot like this water in this bottle. When I tilt it, it goes from one side to the other.
From one shady sip to the next.
One shady sip to the next. I mean, be like water, a wise person once said. So when the economy tilts you one way, you flow to the other side. Same rules apply to this market. So essentially, when people couldn't put their money towards like bond markets and treasuries and all this other stuff and other commodities, they turned to equities. And many times they were investing, like, when you think about it, how, like, the next time you get the chance and before you even look at a company, go back and look at their revenue and look at their projections and their earnings. And then ask yourself, based upon how is it that they're performing as a company from their reports versus the stock, you will find that essentially that there's a lot of companies out there that are significantly highly underperforming as an actual functioning company and struggling, but yet their stock is not.
So we had a general question I think was answered. It was, why was the market down today? And I mean, basically, from what I could gather, it's based on this stimulus not being passed and the uncertainty of it all. But was there anything else that you think contributed to that?
Yeah. So a lot of folks are also being spooked by the economics.
Mm.
We still have some reports that are coming out from the Fed, as well as from, I think we also got word from the IMF, or it was either the IMF, or I think it was the IMF as well as the ECB, the European Central Bank, and they are painting a picture that doesn't really quite comfort Wall Street. And so it's spooking investors by saying that, hey, we could be seeing some cataclysmic activity, or we could be seeing some downfalls. And then on top of that, without stimulus, we could be seeing some major issues here. And so it's like this is the part where the economy needs stimulus. I mean, stimulus hasn't got the economy this far. It's got to bring it home for 2020.
I
And
mean,
now it's
Brother
not the time to
Jerome
really
said
play
that
politics. Go ahead.
Brother Jerome said that too.
Yeah.
There.
You can't just throw it all in the Fed and then just expect like the Fed to just like say, okay, hey, we're going to hold the American economy up. That's not going to work. Congress needs to get to work and actually pass a stimulus bill. And I get what both sides are arguing. I think that in the end, they're going to come forth with a deal because they know that it's needed. But at the same token, it's very, very sad that, that we're playing politics with people's lives and their livelihoods on the line.
So something switching gears, something funny that happened. Your boy, no, this is your real boy, Elon, and dropping the price of the Model S to what was $69,420. I thought it was funny.
Is that a 4% drop?
Roughly. I thought it was funny because he's such a child. Like he likes playing with those numbers.
No, it makes sense. I mean, right? Because if anybody saw Investor Day, they did say that it would bring down the cost to make the Tesla. Now you don't want to be like, okay, now imagine what that's looking like. You've brought down, like, you're over a period of time, you'll be bringing it down by about 56%, I guess. But then it's like you're still going to charge the same price. I mean, at that point, now it's like you create the argument for people to price gouge. So, I mean, what he's doing is smart.
I know, but it's also funny in light of the fact that, what was it, Lucid had their price as well, which was, I believe it was like 71,000 or 70,000. So then Elon, I mean, it is just
wrong with a little bit of pettiness.
I know, that's what I'm just saying. It's funny.
There's nothing wrong with being a little petty, especially in 2020. Sometimes you just need a little bit of petty in order to just make it through.
A little petty never hurt nobody.
A little petty never hurt nobody. A little, just a little bit. Don't go overboard, because then when you go from being a little petty and then just going overboard, now you just got a problem.
Okay, so let me see. I'm scrolling down.
Somebody asked, Bank of America did good today. How is that? I mean, if they reported earnings, I mean, somebody go back and see if they reported earnings. I mean, you're going to see a few banks do well. Most of your regional banks are not going to do well, but most of your major banks should do pretty good, though that most banks also are going to be still struggling because of low interest rates. Mm-hmm. And if we're still keeping interest rates at, pretty much zero, they got to find other creative ways, and a lot of them are trading. So, I mean, that's really where they're making their revenue, along with buying up trading platforms.
So let's talk about the stock ticker NIO, because we have a lot of cousins who they have claimed that as their stock bay, and I thought it was there was a lot of people that have that as their stock bay, and it has been on a run. So let me see. People just want to know.
XLC calls.
What'd you say?
People are asking, should they get out of their XLC calls?
It's not. I think we need to just state that it's not that any of the ones that we got rid of are bad. It's just that it's time for new stuff. So,
you want me to address it?
Go for it.
So when I do something, when I literally give a readjustment to my watch list, it's letting you know what I've been looking at and what Jolyn has also been looking at as well. And so what we do is we're adjusting it because we're looking at what's happening over the next 6 to 12 months, in which that can give us the best performance from here to moving forward. If you're already in XLC and if you already have experienced good performance, then there's nothing wrong with that. Stay put. I mean, the trajectory is still the trajectory. Now, is there some pain ahead? Yes. I mean, for the most part, I mean, going into the end of the year, it's like political and everything else. And when we see political ads and all this other drama going on, Facebook and Google are at the forefront. And then on top of that, Disney is in question. There are also communications. But in the long run, they'll be fine. But what we're picking and what we're adding to the list or removing from the list, we're looking to see how is it that we can trim it so that way for folks that are looking for new trades, something more fresh, how is it that we can look down the road? And there it is. Just something for you to look at and, do a little bit of research and, figure out where you fit in, right, Jolyn?
Yeah, get in where you fit in. Okay, so was that just a regular sip?
My throat's parched.
Oh, okay. So we have Peloton and ticker symbol, Zoom. The question is, are Peloton and Zoom the new GLD and SLV, gold and silver, when it comes to market downturn hedge?
For now. The market will always find its new flavor of the month or the flavor of the quarter. I think we skipped a question, though, because people were asking us about Nio.
I thought you addressed it.
Oh, no, I didn't. Let me quickly address them.
Go ahead.
So Nio, unlike Nio it's new. I mean, do I think that it belongs on the publicly traded market right now? No. Do I think that there's some promise for the company in the future? Yes. Do I think that they still have more to prove? Hell yes. So with that being said, I think that, of course, for those of you that are enjoying the benefits of Nio right now, because there's a lot of traders that are in the stock and that are trading it. I mean, just look at the volume that's taking place within the stock right now. Sooner or later, as the tides of change come and variable change will hit, they too will also be, say, for example, possibly getting the boot. But I mean, overall, I think that the company's good. I mean, it's going to be kind of an uphill battle for them, especially since they're in China and Tesla already has one factory in China and they're building another one, and they're very beloved overseas and especially in Asia. So yeah. But I mean, there's room enough for more. So I mean, as long as they're some of the first players that actually do it well within the EV space, have fun, go mad. But as investors, sip your water now if you've been in it and you've been doing well, but also at the same token, sip your water with a huge side eye.
Okay. IPO, Array Technologies. This is the question. Well, it's not really a question. It's more of a statement that they just want to talk about. So IPO Array Technologies claiming they're a tech company, not a solar company. What are your thoughts on that? I see that they had a jump as much as 45% in their first day of trading. What do you think of this?
Hold my beer. or in my words, hold my water. Because I guess we're gonna have to do this episode on IPOs and give people a little lesson on IPOs, in which that a lot of folks, when you look at IPOs from the day that they first start and then versus what happens to them over the rest of the year of their first IPO, it doesn't really quite perform as good over the longer term. Now, of course, you have some outliers that do well, but for the most part, most IPOs don't do very well after their first day.
Which reminds me of something we went over in production that we need to bring about next week, possibly.
Which is?
I mean, I'll send you a text.
Oh, okay. Yeah. No spoilers.
No spoilers. Okay, so let me bring the screen back up again. All right. So people want to know about any thoughts or impact that they should be aware of for the U.S., China, and Taiwan tensions.
be be worried. I mean, of course, but at the same token, I mean, these tensions have been there since God, since we started beefing with China.
Mm-hmm.
Um, Again, it's just a tale of different strategies. If this were me, I mean, my strategy would have been to get an overall consensus from other countries to join in the fight with me,
Mm-hmm.
to possibly seek forth to get regulation or some type of something, there put in place so that way other countries are protected. I just can't wait for 2020 to be over.
I feel it. Well, let's talk about something a little more upbeat. Apple and their selling out in Taiwan. So,
I think we're asking the wrong question.
what's the question?
The question isn't like, okay, hey, Apple selling out in Taiwan. The bigger question is, where are they not going to be selling out when it comes to this major release? That's the question.
All right. So, homework. Okay, let's see. Someone wanted to know in general about China ETFs.
Stay tuned.
Okay, Ron, I hope you got that. Stay tuned. And this is a general announcement. I do want to say to some of the cousins that are still, in the hood, aka Robin Hood, for those of you that were impacted, I hope that you were able to get your money back and that you have made plans to transition. You notice that those things haven't been happening with other platforms. So it's just something to be aware of. I'm not saying that it can't happen with other platforms, but
I don't think it's gonna happen with other platforms.
I mean, anything's possible, but I'm saying that it's more likely to happen with,
So let me give my quick take. There have been many issues, and over just this year alone, that have come from one major trading or one trading platform that has become major over this year, thanks to the large inflow of folks that are at home, or just thanks to COVID, where it's changed, what your source of income looks like, and you're trying to make an honest buck. I mean, welcome to capitalism. But then there comes this point in time, if you ever want to just have this, because we don't hear any, have you noticed you haven't heard any spokesperson or anybody from this company literally come forth and literally give any type of accountability or take responsibility, or also just say, hey, we can do better? Nobody. I'm gonna do this as a shameless plug. We don't make anything off of them, but we did bring Victor from Doe, and if you're really still accustomed to wanting to just still use a mobile platform, then just sign up for Doe. I mean, if you want to know what it's like to actually hear what his, not even his pitch, but where he is and where his mindset is as a company and as the CEO of it, go back and look at that episode of Let's Get This Bread or Get That Bread, and actually just hear it straight from him and let him and let's see, because so far, have you heard anything from Robinhood CEO?
No.
Do you even know who Robinhood CEO is?
No, I don't really care about Robinhood, but no.
So, I mean, I would say hey, I'm going to put it out there. And if anybody wants to retweet it or, post it on Instagram, I mean, I'll give you a fair shake, Robinhood, so that way you can bring your CEO on the Come Up series and literally talk about Robinhood and, really either, possibly bring certain things to light or to possibly, enlighten the folks in which that are users of your platform, because there's a lot of questions. And I'm gonna just be real with you. If you do come on the show, I mean, I'm going to ask you some serious questions, and I will give it to you straight, no chaser. Because the consumers want to know, and our goal is to also protect folks and help them grow their capital. So I mean, feel free if you'd like to come on. I don't think that they'll accept our invite, but that's fine. But at the same token, we have had a CEO that represented a brokerage platform. Are they the best platform? Not yet, or no. But could they be? Possibly. We don't know. But at the end of the day, we know where they stand. We know where their heart is. We know what their focus is and who their number one focus is. So at that point, it's like, it's not that hard for me to debate, and it's not really a debate. It's just, it is what it is.
In our last 4 minutes here, we have some announcements.
Okay.
I mean, you can also give your benediction as well, but so we have a few things cooking with the cousins and the come up cousins.
You're a little frozen, by the way. So we just have to look at
frozen. Yeah, I can tell. I think it's back.
Yeah, you're good.
Okay, so in the Facebook group, the Come Up Cousins, you can apply to, join. There's a book club that the cousins just started, and the first book is going to be on the book called Thinking Strategically, and that book club starts on October 21st. So you have time to get the book, and I don't know how many chapters y'all have scheduled for that first meeting, but that's going to be on October 21st. The link will be posted on Facebook within the Come Up Cousins group. So if you're not a part of that, then go ahead and apply to join. It's free, obviously, but you still need to apply. And then also there is Sector Sundays. And this Sector Sunday will be led by Coach Head, and the sector will be the consumer discretionary sector. So what ends up happening is we have some cousins. All our cousins are scholars, okay? F what you heard. Our cousins are scholars, and they are taking over. They've divided up all the different sectors. There's 11 of them, and so I think it's every 2 Sundays. I don't know what the cadence is, but if you're in the group, you'll know what the cadence is. Those links will be posted as well in the Facebook group, Come Up Cousins. And so if you really are about this life, you know where to go. And you know you're going to have to do some work. So
nothing wrong with that.
Yeah,
it's funny when you put the work in, and then after you put the work in, you think differently, and on top of that, you see the world differently, and on top of that, you're a stronger trader. But
and it's Coach Head's birthday.
Well, pause it.
Confetti.
Yes.
Happy birthday.
Happy birthday, Coach Head. And on top of that, we love you. We thank you for also being a huge supporter of ours, and on top of that, just being an awesome person. So many blessings to you. Sip your water. And also congratulations on the coaching job as well.
Confetti and a sip. That's not shady. That's a success sip.
That is.
There was something just went by. Really important thing about applying for membership to the Come Up Cousins. You need to answer all questions. I've been hearing that sometimes all questions don't appear from your mobile device. So you may need to go onto a desktop, laptop, or something so you can see all the questions, because if you don't answer all the questions, you will be denied. No questions asked. They don't care. All the admin will just be like, whoop, denied. So don't get in my DMs asking me about it, because I ain't got nothing to do with it. My name is Bennett and I ain't in it.
I just create content. Trade.
So the admin holding that down. Shout out to you all. Appreciate you all. Shout out to all the moderators in our YouTube live. You all have been really doing an awesome job. So thank you for that. Thank you. And I think we can wrap it up early, or not early, but wrap it up on time and prepare for
the lounge.
Dope. Let me get my bonnet.
Well, I'm excited for you, by the way, because somebody's got an episode dropping.
I forget. Yes, so you guys, your girl, will be premiering Wealth Rituals episode 1. Super excited, y'all. Steve has been putting his foot in some things, y'all. You know how Steve goes. So I'm really excited to share the journey with you all. And we'll just be focusing on like my first year of investing. And, we'll be sharing actual numbers where I start, ain't no shame in my game, y'all. I want you all to know. And it's funny because the difference between that first year compared to now, it's crazy. It's crazy. I don't know if I'm gonna tell y'all those numbers, just keep it real. Maybe that's a season 2, maybe that's a season 1 finale. I don't know. But what I do know is that it's going down on Sunday. Time has not been set, even though Mark thinks he knows the time it's gonna be. It will be after.
We'll just ask Father Time over there.
Timo. So yeah, I'm really excited about that. I hope y'all will join, watch, spam up the comments, go crazy in the comments, and the likes and all that. And yeah, so we have 4 episodes already.
Should we give an update on where we are should we give an update for the upcoming stuff too?
Oh yeah, go for it.
Okay. Now, of course, people are asking like, what's going on with where are the replacement picks?
We got them.
We got y'all.
We got them.
It'll drop after the lounge, so just as a heads up. And some people are asking who's my Bobby Axelrod. You'll find out. So on November 3rd, we know that we set a precedent for I think 5,000 likes. We are very, very close. Very close.
For that episode, so that would be Tuesday's episode, right?
That will be election night. So that will be, Tuesday night.
No, what I'm saying is the likes
goes to next Tuesday.
No, that's not what I'm saying. What I'm saying is we're looking for 5,000 likes on Tuesday's video.
Correct.
The one we just had.
Yes.
Okay.
So if we get there, we got some we may have some potential surprises that we will divulge on Tuesday. If not, you just
be a regular Tuesday.
I'll just get ready for regular Tuesday.
Now we still turn up, but it just won't be as.
I woke up in a new. I'm just kidding.
You know what song I'm gonna be listening to?
Oh God. Dum 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 dum. No, but I guess in closing, thank you to each and every single one of you for supporting us. I mean, just to think, where we've started and then where we are today as a channel where, Jolyn and I are YouTube content creators and we're having so much fun doing it. There are a lot of new series that are coming out on the pipeline and possibly more creators that are joining the stage. Because our goal is that we want to show you that essentially that it's many different faces. The overall blueprint is that, again, we get to a point where the Come Up series goes from Monday all the way to Sunday. So we're working on it. But thank you to each and every single one of you. You'll find me over there in lounge sessions. I gotta find my shades because I know that the bonnet gang and the do-rag gang will be something heavy today. So I gotta hold it down for the shade gang. And
wait, Mark, I saw something. Weren't you? Did that already happen? Sorry, I didn't see the date.
What already happened?
I saw your face plastered on some stuff.
Oh, yes. So tomorrow I'm going to be doing 2 different things tomorrow. So your boy's going to be busy. So I will be doing a live on IG with HBCU Black Wall Street. That's at 3 p.m. Eastern Standard Time. Yeah, sometimes I got to get it right myself because it kind of like throws me off when I just see it without the time. But yeah, it's 3 p.m. Eastern Standard Time. You'll find me on Instagram. Also, right after that, I will be doing another show, which is with United Financial. So I will be posting up those things on my Instagram, and you will see the flyers with my face. Who knows what I'm doing, but it should be pretty cool. And it'd be dope if you join in on the fun. Hopefully, you never know, when I do specific shows, I like to sprinkle some new things that I may have not talked about. So, yeah, come along with me.
Okay. All right. Well, I think that's it.
That's it?
That's all she wrote.
I mean, we were 5 minutes over, so my wife should be okay with, like, hey. But in the end, thank you for each and every single one of you for rocking with us. I'll catch y'all in the lounge session. This has been Hot Take Thursday. Be safe, keep researching, be kind to one another, and I'll see you in the next one. Until next time, I'm Mark Monroe.
And I'm Jolyn GC, in the place to be.
And this has been Hot Take Thursday. Have a good night, everyone.